Thanks so much for tuning into the trade setup with me, Niraj Shah. Well, it's the big day of the election verdict. Maybe the verdict comes, maybe it doesn't today, because maybe it's a long drawn process in the US presidential elections. But really, that is what the world is obsessed with. As of 7:45 a.m., as per data available to us, these were the numbers as they stood. Like we said, this will change. It will be materially different. It could be materially different as time progresses as well. But let's wait and watch. In fact, early morning, when I was listening in to global networks as well, and in fact, NDTV as well, it is the southern states wherein the Republicans hold an advantage that have been counted thus far. The blue states are yet to come into fray. So this could change as well. If you're watching this at 10 a.m., it could look materially different. Please don't mind. Okay, let's go on to what the world markets have done. So US markets actually had a really good day. Futures are trading in the green at 7:45 a.m. when we speak to you about this. Asia is trading with a fair degree of green, if you will. Our markets had a big bounce back in trade yesterday. For now, 30 points off, but you know these numbers don't matter really. And frankly, if you look at my trade setup, today you won't get too much simply because all eyes are out on the US election verdict, and this will determine what global markets do and thereby what Indian markets do as well. Very volatile. Best not to trade today. It's very difficult to call a trade with uncertainty around the US polls and US election verdict. Just that when you look at specific pockets or themes which have done or not done well, I think jewelry soundbites are looking very cautious, and independent of what the markets do, the jewelry space may be in a bit of a spot of bother, may say sideways, so keep an eye out for that. Banks look interestingly poised though, and yesterday Bank Nifty had a big move. Now Q2 has seen quality banks deliver very strong numbers and outlook as well. The potential cut in CRR and deposit rates could be positive for banks. LDRs looked okay as well. Retail delinquencies are not as bad as feared, and therefore this can abate the risk of a surge in credit costs, which is a big fear in people's minds when they think about banks. They're trading at about 35% discount to the Nifty versus an average discount of 12%. So there are a lot of people who are saying we are not present in private lenders at all. We don't want to be. That argument is also right, but the valuations are compelling. A narrowing of these valuations alone could make some gains as well. So some quality banks may actually do well too. Bear that in mind. I'm not advocating for 1 year. We are not recommending anything, but it does look that banks are presenting a compelling case for some bit of an uptick. So keep an eye out for these. Okay, now what about specific stocks to monitor in the session today? A lot of them will be in focus today. Firstly, Hindustan Zinc. While metals have done really well yesterday, the government has decided to sell up to 2.5% stake in the company via an OFS route. The floor price is set at 505, which is about a 9.8% discount. That's fairly steep. I would reckon this could hurt Hindustan Zinc today on open. So watch out for this one. If successfully subscribed, sure, the price could recover because metals are looking okay. But wait and watch. Keep in mind, viewers, if there is a Trump victory, then the market will want to believe that China will give an exaggerated stimulus to counter any problems of tariffs, and that might actually augur well for metals. Now, whether China does that or no on Friday is separate, but the market may believe so, and therefore metals may rally. So bear that in mind. Why I said jewelry is a spot of bother. Look at Titan's numbers. Revenues were up 16%. The estimates was 13,425. They've clocked in 14,534. So revenue is much above estimates. Margins are a problem. 275 basis points lower at 8.5% versus estimates of 11.7%. Net profit down 23% as a result, 704 crores. The estimates were 969 crores. So the bottom line in the operational metrics for Titan not looking good. They've spoken about elevated competitive intensity and increased gold discounting by local players. The company's revised the margin guidance to 11 to 11.5 from 11.5 to 12.5. Sorry, excuse me, it's my error. It's not 15.5. The band was 11.5 to 12.5. They've revised it to 11 to 11.5. So it's come off the margin guidance. And the good part for Titan though is that the wedding demand, well, thank you so much to my producer for that. The wedding demand has picked up, which is expected to last for 2 quarters. So that's a bit of an antidote, but I believe the margin issue might hurt Titan. So watch out for that one. Dr. Reddy's to a bit of a miss really. If you look at revenues, 803438 crores versus estimates of 7717, that is okay. But EBITDA margin much lower than estimated, 25.83 versus 28%. Net profit as a result, 1342 versus estimates of 1427. Operationally, gross margin level wise, a bit of a weakness clearly seen. So let's see if this one reacts. What could do well though is Mankind Pharma. Very strong numbers. Revenues up 13.58% at 3076 in line with estimates of 3050. But EBITDA margin doing much better, 27.63 versus estimates of 25.6. So operationally it's done really well. Net profit at up 28.96% at 659 crores. The estimate was 600 crores, so better than estimates as well. There was a sequential reduction in other expenses, which helped the profit after tax growth as well. They were down about 8% quarter on quarter. The company said that they will reduce debt via QIP plus sale of non-core assets. And Jefferies says that the best for Mankind is yet to come. They have hiked the target price to 3,200 from some 2,300, 2,400 odd. The current price is 2,714. So suffice to say, Mankind could actually react positively. Eclerx, to my mind, is the result of the day and could well be the stock of the day. Revenues up 6.26% at 831 crores versus estimates of 8110. Very strong numbers sequentially. EBIT margin 463 basis points higher at 21.9. Estimates were 19.8. As a result, net profit, quarter on quarter, net profit up 24% at 139. The estimates were 129. Very strong numbers, very strong annual contract value as well, with new deal wins up 13% YOY on a trailing 12-month basis, 13% uptick in new deal wins. And it was a fifth consecutive quarter of headcount addition. Shows that the management believes that the business is looking solid. Do watch out for Eclerx. I think, independent of the valuations, could well turn out to be a big mover in trade today. Timken is ho-hum. I'll quickly skip that. I mean, revenues, EBITDA margin, net profit, almost everything in line, so nothing to write home about. Worry lived up to its billing. It's run up very well, run up quite a bit. But look at the numbers. Revenues up 3.5x. So at 524. Then EBIT margin at 13.6 versus 20.4. There is a bit of a chink there. As a result of which the net profit was not up 3.5x, but only 161%. But 161% uptick in net profit is not bad. This stock, the way it has run up, definitely needed good numbers. I think they've delivered good numbers, even if there's a margin miss. It's a good number. So let's wait and watch. CCL Products, steady as she goes, 21% uptick in revenue, 21% uptick in bottom line, and in between margins remaining very steady, 18.56. The estimates were 16.6, but the comparable number was 18% any which way. So steady as she goes, good numbers. Maybe the street rewards it. JK Tyre and Triveni, howlers though. JK Tyre, revenue down 7%. EBIT margin 348 basis points lower at 11.6. The estimates were 12.9. Net profit down 43% at 140 crores. The estimates were 203 crores. Not a good number. Not a good number for Triveni Engineering either. Revenues were up 5.8%, measly 5.8% at 1491. But EBITDA margin down 420 basis points at 0.26% versus 4.47%. There was a net loss of 31 crores versus, a net loss of 22 crores versus a profit of 29 crores. So suffice to say, this one could react negatively, as could Chemplast Sanmar. I mean, there were estimates. I don't know how reliable these estimates are because I don't know how many people track this. But the absolute numbers look shabby. 992 crores, revenues flat, EBITDA margin down. There was a net loss of 31 crores versus profit of 26 crores. Yes, the estimated net loss was higher, but not a good number. May react negatively. Watch out for this one. Berger Paints too. Results were below estimates. Some green shoots though seen in October. Maybe that helps the stock, but otherwise the numbers were certainly below estimates. Most brokerages have said it's a miss. Lastly, speaking of brokerages, there are multiple brokerage calls. The one that stood out for me is the Jefferies note on GAIL. They've upgraded the stock to a buy. The target price has been hiked to 240 from 190. They say new pipelines are driving market share gains, and they see this continuing. The trading profitability should continue on muted Henry Hub price, and a 20% correction from the recent peak makes the risk reward favorable for GAIL. So do watch out. Maybe, just maybe, this one could turn out to be a good mover in the session today. Oil and gas has been subdued, but this one could have a decent outing, so watch out for this. Thanks so much for tuning into the trade setup. And mind you, the numbers that we showed you at the start on the US election outcome will change dramatically, so don't blame me for that. Thanks so much for tuning in.